Apple is one of Warren Buffett's best investments of all time, and it's still one of the top holdings in his current portfolio. But is it a stock that we should consider buying at its current trading price? In this video, we're going to be looking into Apple's recent earnings report, and more importantly, we're going to be jumping into my stock valuation spreadsheet to calculate the intrinsic value of Apple. Apple stock is currently trading at $160 a share, which is down from its all-time high of $182 per share. The stock is currently down about 12% year to date, despite beating investors' expectations in their recent earnings report.
After Apple reported a record quarter driven by iPhone strength, the company beat expectations for every single one of its divisions except for iPads. Those did face particular supply constraints. Overall revenue grew a better than expected 11% to $123.9 billion. That's ahead of the $118.7 billion that analysts estimated. Earnings per share of $2.10 beat estimates of $1.89. I spoke to CEO Tim Cook. He told me that iPhone sales were strongest in the last 2 weeks of the quarter, though not a surprise. He said it does bode well for momentum.
Apple's massive earnings report left no doubt that the company is just as strong as ever and is growing rapidly, but that doesn't always tell the whole story. If you've watched the channel before, then you know that I'm a big believer that calculating the intrinsic value is by far the best way to make great investment decisions. So let's go ahead and jump into my stock valuation spreadsheet. If you'd like to be able to download this spreadsheet for your own use, then you can head over to my Patreon page at the link in the description. Okay, so we are currently looking at my stock valuation spreadsheet, and on this spreadsheet we have 4 different valuation models. We have Graham's valuation, we have a discounted cash flow analysis, we have a multiples valuation, and we have a dividend discount model. So let's go ahead and jump over to our stock screener, and we'll come up here and we will plug in Apple's stock ticker and hit enter. And it's just going to fill in all of my data for Apple. So let's go ahead and jump over to Graham's valuation. And this valuation model was invented by Benjamin Graham, who is one of Warren Buffett's mentors. And you can see right here, I plugged in what the formula is for his valuation model. I've gone ahead and put in the numbers. So for Apple, you can see the first thing we need is our earnings per share, which is currently 6.02. We then take the price to earnings of a company with no growth, which is 7. Apple's growth rate is projected to be 17 by analysts. We then multiply it by 4.4, which is the average yield of a AAA corporate bond. We then divide it by the current yield of AAA corporate bonds, which has been trending upwards lately and is at 3.34. So according to Benjamin Graham's valuation model, Apple has an intrinsic value of $190.33. But let's go ahead and jump over to our discounted cash flow analysis. And on our discounted cash flow analysis model, you can see I've gone ahead and built this one out as well. And in order to perform a discounted cash flow analysis, the first thing we need to do is find the growth rate for Apple's future free cash flows. So in order to do this, you can see I took Apple's historical free cash flows right here and calculated their average growth rate, which is about 16.74%. So that's on par with analyst projections as well. So when you factor in things like industry standards and Apple's projected growth rate, I used a growth rate of 17% for their future free cash flows. I then projected these future free cash flows forward 10 years and calculated the terminal value, which is essentially just the value of all the cash flows for them past the year 2030. I then did a very important step, which is to take the present value of all of these future free cash flows. I then added all of these future free cash flows together. I added Apple's cash and cash equivalents and then subtracted their total debt. What this allowed me to do was to calculate Apple's equity value. Once we have this number, all that's left to do is divide the equity value by the number of shares outstanding. And once we've done this, you can see our discounted cash flow analysis allowed us to find an intrinsic value for Apple of $218.20 per share. So let's go ahead and jump over to our multiples valuation model. And if you're not familiar with what a multiples valuation model is, essentially it's a valuation theory based on the idea that similar assets are going to sell at similar prices, and it typically uses certain ratios to do this. So for this multiples valuation model, you can see I used a price to earnings multiple. So what we want to do is we want to take companies that are somewhat similar to Apple, such as Facebook, Amazon, and Microsoft, and we're going to look at their stock price compared to their earnings per share. And we do this, we can calculate their price to earnings multiple. What I then did is I took the average price to earnings multiple for all 3 of these companies, and I then multiplied this number by Apple's earnings per share to find their stock price. So this stock price is relative to what these other companies are trading at based on their earnings per share. So based off of this model, we can see Apple's intrinsic value is $178.48. And the last model we're going to use is I am a dividend investor, so I think it's fair to look at the dividend discount model. And for our dividend discount model, essentially the idea is that we can value a company based on how much they pay out in dividends and how much that dividend payout is going to grow in the future. So anytime we want to make a prediction about a company's future growth, we're going to look at historical data on the company in order to make some assumptions. So you can see I looked at what their quarterly dividend payout was over the past few years to find their yearly dividend payout and what the growth rate for these payouts was. I was able to calculate an average growth rate for their dividends of 8.79% over the past few years, which is a really good dividend growth rate. I then used that number and the discount rate, plugged it into this formula here, and you can see based off of our dividend discount model, the intrinsic value of Apple is $233.94 per share. So now let's go ahead and put them all together and look at my output tab. And here on the output tab, we can see all four of our valuation models and what the intrinsic value was. So for Graham's valuation, $190 per share, multiples valuation, $178 per share, our discounted cash flow model, $218 per share, and for our dividend discount model, $233 per share. So to calculate the intrinsic value, I'm going to keep it simple. I'm just going to take the average of all four of these models. And you can see based off of this, the intrinsic value of Apple is about $205 per share. And when we look at compared to the current price, which is about $160 per share, that's about a 22% difference. Now, I am a value dividend investor, so I think it's really important to always apply a margin of safety, as this is going to help with any potential errors we had in our calculation. So I'm typically going to apply about a 10% margin of safety. I'll hit enter on that. And you can see based off of this, our stock valuation spreadsheet is telling us that an acceptable buy price for Apple is $184 per share. So it is giving us a signal to buy this stock. Just like I said earlier, I'm a huge believer that calculating the intrinsic value of a stock is the best way to make great investment decisions. But it's also important to remember that at times it can take a while for a stock to reflect its intrinsic value due to a multitude of reasons, whether it be geopolitical tensions or simple market volatility. But if you always seek to buy a stock based off of its intrinsic value while applying a margin of safety, you can be pretty confident that your investments will perform pretty well in the long term. Let me know in the comments below if you currently own Apple stock or if you have plans to buy it in the future. If you'd like to be able to download this stock valuation spreadsheet, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching this video, and please don't forget to like and subscribe to the channel.